Hi, welcome to this video update, which is our weekly Forex forecast, 12th of September. It's Saturday. Just going to pick out some pairs that we think could offer good risk-reward trading opportunities for the week ahead. We've got quite a few charts to look at. Now, just before we go and look at the trading opportunities, just please do keep in mind, it is my view as of right now. It can, of course, change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 FX pairs. If you click on the link beneath this video, you can get live access to our member centre. You can also follow us on Facebook and join our Facebook group of traders as well. And I'm just updating the charts for our member centre, so I'm going to use the charts from there. So let's go and take a look at them. Right, just in our member centre, the first pair we're going to go to Euro USD. Now, I did a video on this last week. Not too much has happened since I did the video. What we have is the euro had a strong rally there, and then we just dropped into a kind of sideways trading period. Okay, lower volatility. Now, from our perspective, we expect a big breakdown in the euro, and yeah, if the euro does go higher, it's got limited upside. Now, in terms of anyone new watching our videos, well, we use technicals to time our trades and manage the trades. We will always have a directional bias from the sentiment, okay? Sentiment obviously drives the chart. It doesn't come out of nowhere. And I think in terms of sentiment, it really looks like we're going to get a breakdown. I'm just going to show you the euro positions on our favorite sentiment tool, the COT Net Traders positions. Now, there is a full video on how we use this indicator on our channel. I'll just briefly explain how we use it here. Got two groups: dealers, they're smart money commercial hedgers, green line; speculators, grey line. Okay, now the way we use the indicator is to look for really big divergences between the groups. If they really diverge heavily, we'll normally be looking to go in favour of the commercials. You have big divergence back in 2017. Specs really build up long positions, commercials really build up short positions. Then yeah, the price kind of stalls after it rallies, then it breaks in favor of the commercials. Okay, about 1,000 pips. Both groups drop down. Okay, so speculators remain long, but yeah, no extreme. Commercials are the same. Then the two groups go heavily against each other, just like they did back in 2017. At this moment in time, that points to a big breakdown in our view. Now, I don't think it's going to be a 1,000 pip decline this time, but it's going to be a sizable one. I think if we come through this level here, get 600 pips on the downside, hopefully. Okay. Now, in terms of, we know speculators are heavily long, and they're really failing to push or sustain the euro moves up. Okay, so you move up here, come back. This is a good move in a way because it goes through this level here, the top of the range up, which is 119, and we'll poke at 120. Okay, no more buyers. It's a big level, and then we come straight back down. Now a little bit of a rally. Already got a position in, which is slightly underwater at the moment. It's not really doing much at all. But for us, euro, if we break back below 117.70, we'll see the speculators exit the market on stop in our view, and that will target 112. If we were to rally up towards the 120 level again, I would just sell off the level, put an extra position in up there, because just do not think the 120 level can get taken out. And I'm going to go through all the fundamentals in terms of the euro here. I did it in the video last week. You can go and check it out if you wish. But yeah, the euro rally is on borrowed time, going down. And the USD is just oversold everywhere. So we're looking for a broad base USD rally. Now, in terms of this one, it's a bit of a waiting game. We'll see what happens. But in terms of the British pound, next pair, we've already broken to the downside, and it's a really big move actually. So for us, it's about 550 pips. We're going to take 50% out. At the moment, I've got level 127.50 for anyone who's a member. I'll probably change that on Monday to out at market, okay? Because we take half off, let the other half run hopefully to 125. The half we've taken in, we could put back in on a rally to 130. Now the British pound has been falling due to the breakdown in trade negotiations. So I think in terms of USD rally, you could get a rally, but it won't be a big one. But in terms of the crosses, I think the pound looks very attractive on strength. I'll come to the pound crosses a bit later. This one's run okay. We'll see what happens. But yeah, if she rallies back towards 130, selling opportunity. Okay. Where are we going next? We're going to go to the AUD USD. All right, AUD USD. Now, in terms of the AUD, big rally up from the March lows, about 30%. Okay. Now, in terms of the recent price action, you kind of have prices just consolidate around my black support line here. Break above it briefly, come back through, then a decisive break. Okay. And then we peak out into the 74 level. And then we come back and the previous resistance is providing support. Now, I personally think the Aussie now could be getting ready for a big breakdown. And the upside is limited. This pair's run on far further than I thought to the upside, though. But in terms of the Aussie dollar, what's supported it? What's given it such a big rally? Well, we know stock markets have been strong. That normally helps the Aussie dollar. But the real support, I think, has come from commodities. And if I look at Australia's biggest export, which is obviously iron ore, look at that for a rally. 57% this year. That's better than gold. That's one of the top performing assets. Now, in terms of the big move up, you can see my notes, but just very briefly, there were supply disruptions in Brazil, which I've noted here, but Brazil is now back to full production. But speculators have bought this rally as well. Okay, and I quite like what Morgan Stanley say here. In terms of the heavy speculation, could have a significant decline similar to 2019. That's when iron ore prices hit 120 a tonne. They're slightly above that now, and free fall to 86 per tonne. If they do the same again, you're going to retrace almost all of the rally, and that will weigh on the Aussie dollar. So keep your eye on iron ore, also copper, all commodities at the moment. Huge speculative long positions, and they're going to come out the market. In our view, commodities will come down, and that will pressure commodity currencies, such obviously as the Aussie dollar. So basically, sorry, I've gone to the wrong page. Break of the support level, and then to correct the overbought condition in the Aussie, I think we should go to 65. Obviously, manage the trade as it goes, but after such a big rally, I think that level is on the cards. So small position in at the moment, not doing much at all, but a break lower will take, and we'd probably put another trade in if we go up to the highs. Okay, we'll see. Next pair, USD JPY. This is one not got any position in it at all. In terms of the price action, it's interesting. This big red comes down, you get blue, yeah? Then as the candles come up, they get smaller and smaller. Okay, so tiny little candles, the volatilities really drop down, and we're just sitting on the 20-day moving average or mid-Bollinger Band. And when you get the volatility really drop down like this, you can very often expect a big move, and we think it will be to the upside. Now, why we think it will be to the upside is to do with the COT net traders positions. Let's bring them up. In terms of Japanese yen, speculators come in heavily and buy it here, and commercials heavily sell it. So they reach an extreme against each other. We top out, we go down about 400 or 500 pips. Same here, they run up. Speculators to big long position, commercials drop against them. It's about 400 or 500 pips. And then they've done the same again. So commercials, dealers are bullish of the dollar, and speculators are bearish and pretty short. So we think they could get run on stop. So if we break out, we'll be looking for a strong follow through buying. Okay, at the moment I've dropped my stop behind this level, but I think going to adjust that, because if we do break out, we're looking for immediate follow through. We'll put the stop behind here. Okay. yeah, if it doesn't follow through strongly to the upside, just take trade out. But we're looking for a stop run. So we'll see with USD JPY. Now, in terms of JPY, longer term, I'm bullish. Just short term, I'm bearish of the JPY just simply because the dollar is so oversold. It's one of its biggest oversold conditions in many, many years. Now, in terms of another pair we're looking at, USD CAD. And in terms of this one, sorry, let me get my levels. In terms of the USD, it kind of goes below the 20-day moving average here, the green line. And, it contains the price action, okay? You very often get big bear trends. But then what happens is the USD comes up, slices the 20-day moving average decisively the first time since July. And we take that as a very bullish sign. We're now looking for the average was resistance. We're now looking for it to provide support. Came back to it there, held up a bit, just trading above it. I think we've got good support here. I've got a position in already, like I said, but we would add another position if we went down to 130 because that's a huge level of support. But I don't think that's going to happen. I think we're going to get a breakout. 132.40 we'll add and look for a move up to 137. We break out, the stop will be tight behind the 20 and the double trend line support. Canadian dollar, it's a commodity currency as well, and we're just basically bearish of the commodity complex. Okay, so I expect to see the USD do well on all the commodity currencies, and also including the NZD. So you can see from these pairs, the USD is kind of getting ready, in our view, for a big move, but it hasn't occurred yet. I'm looking for it hopefully to occur in the new week. Right, let's go to another page and check out some more pairs. Right, this pair GBP NZD. Now, in terms of GBP, I said obviously earlier on, I'm going to remain bearish on the USD, but in the crosses, I really like the GBP. I like this cross in particular. Now, in terms of the GBP, goes up on the NZD there, double tops, and then that's about well over 1,000 pip fall. You get kind of a gentle fall, then she kind of falls off a cliff. Yeah, obviously this big sharp fall down here to do with trade negotiations between the EU and the UK. They're not going well. The media and many learned analysts are telling us that they're probably not going to do a trade deal. Speculators are piled in on that becoming an eventuality. We think they will do a deal. Okay. Now, in terms of why they'll do a deal, I've written on my Facebook page and also on my blog, so you can go and check out the reasons. But it really reminds me of last autumn, this fall, when the media was full of like Brexit, that they will not agree a Brexit deal. Speculators sold heavily, and then they agreed a deal, and the pound rebounded strongly. Same is going to happen again. Just very briefly, both sides need a deal. They're both still talking. They will do a deal. Okay. Now, in terms of the worst being in the price, I think it is not going to take much to turn this one around. We poked down towards a key support level 190 on Friday, but didn't get near it. Still red though. Just let price action get you in. Just I'm going to come through here. That will also be back within the outer Bollinger Band. They've widened out, very volatile at the moment, the pound. Moves outside of the outer Bollinger Band, like coming back within. If we do come back within, I'd expect the real steep decline to be retraced pretty quickly, and then the whole decline. The NZD actually has also been pretty strong everywhere, actually. Okay, because it's got an additional boost from the problems that the UK is having with the EU. But yeah, I'd like to look at this trade, and it's a really good risk to reward. I like the pound long in a few other crosses as well. Let's have a look at the next pair, which is going to be USD CHF. Now, this is a really messy chart, okay? Mostly sideways action. Did take a long trade. We broke out. I bought my stop up, got taken out. It was a minor loss, but I should have kept my stop behind the bottom of this channel. Now, in terms of this one, just so bullish. Why? CRT net traders positions. Look at that. That is the biggest speculative position in 10 years, biggest long position. Commercials, biggest short position. Last time speculators, they weren't as bullish as this here, but the Swiss franc did have a nice decline. Yeah, like the look of, sorry, get back to my chart, like the look of a move up to 96 to correct the oversold condition. In terms of an entry into this pair, I'm not even going to wait for these candles here. I'm going to place a trade in just here. And then if we run above this level, I'll add again. Okay, going to 96. A lot of speculators short think they're going to get run on stop. Volatility is low. Dollar, just really not much downside in our view, and plenty of upside. So another USD pair. And let's go. Actually, I'll look at another USD pair here, which is USD Swedish krona. Swedish krona, if you took it against all other currencies, has been the strongest over the last 3 months. Okay, and you can see a huge fall in the USD. Now we've got choppy, sideways action, low volatility. The dollar has held the lows. Okay, now it's just trading below resistance. Majority in the market, if you look at analysts, economists, banks, brokers, think the USD is going down into the end of the year. Speculators are so short this pair. That's done from our own research. There is no COT, yeah, but they are extremely short from our research of banks and so forth. That if we break out, we've already got position in. If we break out, we should go straight up towards the 950 level. So I really like the look of USD SEK. Also, if the euro goes down, the euro proxies tend to go down quicker, and or correlated pairs. So the SEK is obviously correlated with the euro. So at the minute, it's frustrating. It's just getting ready, so to speak, or traveling sideways, breakout up to 950. Right, let's go and take a look at another page, and I was going to look at a couple of crosses. Right, so Euro JPY. In terms of the euro, it does surge up there. Then we have a retracement back to the 120 level. Then we take off again to the upside. Now we've got very choppy, messy, sideways action. It looks a bit similar, or it's a similar scenario to Euro USD. Now, in terms of the channel, poking up to this resistance level here, it's above 126, the two candle tails. The exhaust back, but we're still blue. I'd wait for a break below 125 here. My level is 124.70 to get clear of the round number, then see if she runs. I think it looks a good risk to reward trade. Euro is overbought, obviously, on the USD. It's also overbought on the yen. So yeah, look for a breakdown. In terms of the euro, next pair is Euro GBP. In terms of Euro GBP, yeah, it's obviously a similar speculatively driven move like GBP NZD, really strong move to the upside. Now we think obviously the rally is a sell, and got a full candle outside the outer Bollinger Band, just like in GBP NZD. We'll just sell back within the outer Bollinger Band through a round number which is 92, and then see if we follow through to the downside. We're looking for the whole rally to be retraced. Now, could we break higher? Yeah, of course we could. If we did break above 93, okay, we'd just play round numbers, just raise our entry. So if it went above 93.20, you can see in my notes, we'll just sell back through the round number at 92.80 and put the stop at 94.60. So we play round numbers if we go higher, okay? But it's an exaggerated move to the upside, or big move to the upside, speculatively driven, so it's an emotional spike. We're looking for it to fade. We shall see. Let's go look at just a few more pairs to finish. This one is USD NOK, US dollar against Norwegian krona. And I know SLS looked at pair, but like the SEK, I really like the look of this pair. You have a big, strong move down in the USD. You can see how that 20-day moving average holds there. Then we break above the 20-day moving average here on this big blue. We'll take the long. Traveling sideways, the 20-day moving average should act as support. We break higher. We should go up to this level just to correct oversold. Now, at the moment, our stop is back behind second level. support. We'll bring it up behind first level support if we break higher. Really good risk to reward, near enough 5 to 1. Now, in terms of USD, like I said, it's getting ready, I think, to break higher in a lot of pairs. But there's one that is really broken higher in, or it's broken higher, sorry. It's USD Tri. This has been one of my favorite pairs for a few months. Really tight volatility down here. It's a very volatile pair, okay? It's unusual to see that sort of action. We favoured the upside breakout, get it. 20-day provides support, push off. 20-day provides support, push off. We're above the 20, trading in a little channel, okay? That's about, I think, 12% move up. Okay, it's a really fast moving pair. And I think there's more upside to come. In terms of my target is 10. That's another 30% on the upside. The reason I'm so bullish is there's a currency crisis in Turkey. It will get worse in our view. So if we break to new multi-year highs, I think that's a good risk to reward long. Just tuck your stop behind the 20-day moving average. Yeah, just a small trade because it is a very volatile pair. But this one's done really, really well for us. And it's one of the few pairs the dollar is really powered. Okay, obviously it's been under pressure in most pairs. What do we got next? I just want to do a couple of crosses to finish. Two pairs to finish, which are going to be CAD JPY, which is this one. I'm going to do NZD JPY. I like the look of this one. Double top here. Load of candles trying to get through the level. Can't do it. Red down. Okay, we've come back a bit. I think this rally is just about done. We're in, and we're going to add in this pair as well. We'd add, if we go back towards the highs, just key off the level, or we'll add through the 80 level, the round number here, the double bodies. Break there, we'll add, and then we'll bring our stop down behind here. Really good risk to reward in our view. So is NZD JPY. Got here is thunder up here. Get to new daily highs, taking out the previous. Stall back through the previous highs. And now kind of hanging around, okay, just above the 20-day moving average. I think first level of resistance will hold here, so you could sell back to that or sell a break below the 20-day moving average. Break below the 20-day moving average, I think we should be off to the downside. You could wait for the 70 level round number to give way to get a bit more confirmation if you wanted. But actually, if we do come through the 20-day moving average, then the 70 round number stop could be popped back behind this level here rather than that one there. So you give you a risk to reward of, if I can do my sort of visual right, about 4 to 1, and I think the other one's 4 to 1 as well. So yeah, in the week ahead, we're looking for the USD. Yeah, it's shown a little bit of strength, looking for it to really correct what is one of the biggest bearish extremes in years, and the yen to follow it higher. And also GBP swing trades. We'll see how they go next week. We've looked at a couple, but there's plenty more. I was going to do more pairs today. I've just run out of time. But I also like the look of GBP CAD long and GBP AUD long as well. We'll see what the week ahead brings. I'll be back next week with the forecast. Until then, thanks for watching. Take care. Have a good trading week.